Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday ETF report. And this is November 22nd, 2025. And folks, another tough week. But remember, if you want to live on this beach like Jimmy Buffett used to do, then you've got to learn how to invest even better than Warren Buffett does now. So let us look at the year-to-date of our favorite ETFs, and we can see that gold is still leading up there. XLU, the utility, the technology, the QQQs, the semiconductors, all remain in those top positions once again. And we have the S&P down here at 11%. So we can see that all of these that I just mentioned are outperforming the S&P 500. And remember, always remember this, that over any 10-year period, 96% of professional money managers who manage the publicly traded mutual funds, so we could follow them, cannot outperform over any 10-year period. That means only 4% of those money managers can outperform over a 10-year period. The problem is it's not the same 4%, or it's not the same money managers that are in that 4%. So let's look at the hard week that we had this week. Remember this chart right here is year to date. So let's go to 1 week, and we come all the way down at the bottom here, and we see the XLK technology, and we see the semiconductor leading the downfall or the decline that we've been having this week, because those were the stocks that were most overpriced. So let's take a quicker look, or a closer look, at the stocks in our portfolios, the portfolios that we made out of the technology and the semiconductor portfolios. But first, let me show you a chart, and this is year to date. And we're looking at, up here, we're looking at the S&P, we're looking at the QQQs, which is the NASDAQ 100, the technology, and the semiconductor ETFs. So this is year to date, and this was the February, March, and April declines in here. And this red line that's all over the place is the semiconductor ETF. So it was down, went further down than the market, and climbed all the way back up, much more than all the indices that we're talking about. And now it has fallen down to this level, 16%, 17%, right in here. Black line is the S&P 500. The blue line is the QQQs, and the green is the technology, and the red, of course, is the semiconductor, as I mentioned. So you can see the volatility in these ETFs, but they do outperform the S&P 500 over time. So let's go to this week, and let's go to the XLK. This is the technology. Now, these are the returns just a month ago. And so the XLK was returning 28%. The XLK ETF returning 28%, and now it's down to 15.3%. S&P was returning 16.6%, and right now, as I'm recording this on Friday afternoon, which is all over the place in the markets, down, up, returning 11.2%. So you can see the XLK, which is the ETF, and the S&P, which is the S&P 500 index, falling quite a bit. Now, how about our special stocks that we picked the top out of all of these? Well, it fell from 65 down to 33, almost got cut in half. But what you want to look at is that, okay, we're still up 33% for the year, which is 3 times the S&P 500 and twice more than the ETF itself. Now, if you were hedged, remember we talked about this hedge probably in the beginning of the year. If we go long our top stocks and short the ETF, we're in a long short position, you would be up 17.8%, close to double the S&P 500, and you are in a hedged position. And that's because we're looking at the XLK, we're shorting the XLK, but we're going long the top stocks. And so that's one of the long-short strategies that people or hedge fund managers run out there. They're long the stocks they think are going to go up, and they're short the index or the stocks they think are going to go down. So it's a long short. And I'll tell you what, on the research that I've been doing, it seems to work very, very well, has worked very, very well over the past 7 years in the technology and the semiconductors. And we're going to see these semiconductors right now. So we go to the semiconductors, and again, semiconductors fell the most, from 40% of a month ago, 14.3%, where the S&P is 11.2%. So the semiconductors, even though they've had a tough 3 week, going on 3 weeks now, they are still ahead of, or the index itself is still ahead of the S&P 500. What about our top stocks? Well, they fell from 87% down to 54, and you say, wow, what a drop. But then when you look at the year-to-date returns, we're looking at 4 times that of the S&P 500. And if you were long and short, long the top stocks, short the XSD or the ETF itself, you're still up 40%. So, folks, this is not too bad. So you have to look at this and say, wow, okay, I'm going to get more volatility, but whether I go long and short or whether I just go long, I'm still up 54% just being long the top stocks in the semiconductor field, and it's almost it is 5 times that of the S&P 500. So even though some of those stocks are getting hurt out there, look at these returns. We're still getting returns 59% on Rambus, Monolithic Power 43%, Advanced Micro 63%. So you're seeing that we're getting a lot of good returns in here. Volatile, yes, that's the word I would use. It's volatile, but it goes up and down. And I was listening to some more Charlie Munger tapes before he passed on. And remember, Charlie Munger is Warren Buffett's partner, or was Warren Buffett's partner in Berkshire Hathaway, and really taught Buffett how to invest. And Buffett knew how to invest, but Charlie Munger said, hey, don't worry about paying higher prices if it's a good company and it's a lasting company that people mutter on their lips, like Gillette razor blades, like some Hershey chocolate bars and things like that. He doesn't have Hershey chocolate, but he's got See's chocolate that they bought on the West Coast. And that's when Munger told Buffett, hey, don't worry about paying up for a good company as long as it's a good company. Now, let's look at the technology over almost 7 years now. And this is a chart that I've showed you before, but of course we're changing these numbers down here on a daily basis. The S&P 500 over 7 years returned about 163%. And down here, the XLK about 342%. Yeah, there shouldn't be dollar signs here. But the top stocks, 825% up in the past 7 years. That's over 100% a year when you divide this compounded return by these 7 years. I want to look at here. This was 2022 and the market was tough. S&P down 19.5%, XLK down 28%. Don't forget the NASDAQ was down 34%. Our top stocks only lost 28% along with the XLK. That was very, very neat when I saw that. I said, oh my gosh, the top stocks really held up. Usually they fall more, as we're going to see in the next slide when we get into the semiconductors. But bottom line is, yeah, if you don't mind that volatility in there, maybe part of your portfolio should be in some of these top stocks that we pick in our ETF letter each year. Up 825% over the S&P, 163%. Let's look at the semiconductors. Same type of thing. We're still up 54% for the year. And I want to show you this, that the semiconductor stocks fell 31%, but the top stocks fell 42%. That's hard to take. But if you were short, don't forget, if you were short the ETF, you would have only lost 11%. because you were long these stocks and you were short this index, and so you only lost 11% in that year. So that's pretty neat. That is very, very good. And what I would like to show you one of these days is a chart that shows, okay, what we should put the hedged part over here and bring that up to date. That would be very, very neat. We don't have to bring it up to date. We have the data. It's just a matter of bringing the chart up to date. That's all. So again, here we are. If you can stand the volatility, you're up, what, 6 times that of the S&P 500. But you've got to be able to handle these downturns in here. And that's why we brought in the hedged. And let me go back to that. That's why we brought in the hedged in the semiconductors. Like right now, if you were hedged, you'd still be up 40%. But during that year, let's go back to it. During this year, you would have only been down 11% instead of 42% if you were hedged, going long the top stocks and going short the index itself. So, folks, we had a tough week this week. We saw our stocks decline quite a bit, but still, with the technology, with the semiconductor stocks, we're still up 54% for the year. That's 5 times more than the S&P. So, if you can stand the volatility, maybe part of your portfolio should be in these top stocks in the ETFs. And I know some of you like to pick stocks from all 4 or 5 of our portfolios that we come up with, and you're doing very well by yourselves, but you're picking the top stocks that we have already picked. But you're sorting them out a little bit differently depending on your ability to handle stress is what it comes down to. So anyway, the weekend is here. Go out, forget about the market, enjoy the weekend, spend a few of those bucks on the 54% you made on technology stocks. Be with your family for Sunday dinner. That would be great. Take your mind off the market. Be safe. Most of all, be safe, be healthy. And folks, we'll see you back here in a couple of days.